I'd like to invite my guest in, Oliver Sloop. Oliver is with Blue Line Futures. And Oliver, tell me what you see out there this morning in this negative market.
Yeah, a lot of red on the screen to start the week, and that really isn't anything new, right? We've seen a lot of prices heading lower, marking lower highs and lower lows for several weeks now. In fact, looking at the Commitment of Traders report, we see that the funds have been net sellers of soybeans for, I believe, 10 consecutive weeks. So the path of least resistance remains lower. And when talking about the Commitment of Traders report and the funds, I hear a lot of people talking about this massive net short position in the corn market. And that alone is not a good enough reason to be bullish this market and looking for them to cover those shorts. There really isn't any fundamental catalyst out there to spook them out of their shorts just yet. And with funds holding a net short position of 265,000 contracts, yes, that's a large position, but you don't have to go too far back in history to see bigger positions. 2020, we're about 300,000 contracts short. 2019, about 350,000 contracts short. So I wouldn't be surprised to see them continue to add to that position until we do get a catalyst. Eventually, we will get a catalyst, and I think we will rally, but from what level? And that's going to be very important to try to stay patient here instead of trying to be a hero and catch a falling knife.
Right. Well, you and I were talking a little bit before we came on air there just about that. And it's really difficult to make those marketing decisions here. But, you lose another $1, $1.50 in beans, and then you go, okay, it's going to rally from here, but it may not ever make it back up to this level again.
That's exactly right, and it's trading and hedging and marketing. It's very much psychological as anything else, right? So looking at some of these psychological levels for beans, specifically $12, we tried probing above that. We're kind of treading right there. The bulls desperately need to hold that level, in my opinion, for this March contract to break and close below there. And we could potentially see a retest of the May and June lows, which is down near 1145 and 1160. At that point, I think there might be some value. But again, it's about what's going to be that catalyst to not just halt the selling, but actually encourage new buyers into the market. And right here, right now, I'm not sure what that would be, except for low prices. Low prices generally cure low prices. Will those May and June lows be enough to lure buyers back into the market? I guess to be determined for the time being.
Absolutely, and I know also it takes quite a bit of exercise and mentality to be able to market grains under these kind of conditions. And you mentioned the buyers coming in, but it's seemingly like we're going to have absolutely a lot of product for them to be able to buy regardless. Seeing this subsoil moisture come in is just going to be phenomenal for our start this spring.
Yeah, and I think you're probably seeing the funds probably get a jump start on that, right? We know that we can grow a pretty decent crop when it's a little bit wet, and we know we can grow a pretty good crop when it's a little bit dry as well. And the funds see this moisture coming in; they're seeing that as a potential for good yields. Obviously, a lot can change between here planting and crop development, so there are still some wild cards out there. But if for those looking to potentially play this market, options are relatively cheap. We got the CVOL index for corn under 18%. That's at the low end of the year's range. So if you don't want to take a big position, whether that be speculating or hedging, options, I think, are a valuable tool in this market environment.
Good deal. Oliver, certainly do appreciate that. You stay with us. We're going to come back and talk with Oliver Sloop about some cattle. Stay with us. Oliver, I was out west and got to see a few feed yards out there and some backgrounding operations. They seem to be in pretty good shape. Have you heard anything different in some of the other areas?
Yeah, I think pretty good shape probably sums it up, at least from what I'm hearing from clients around the country. The price action, though, is really what's caught my eye. And I mean, just what a phenomenal rally here over the last couple of weeks. It has elevated not just the cattle complex, but also the lean hogs. Now we're back to levels we haven't not seen since September as the cash market continues to firm up. And we talked about the funds and positioning on the grain side of things. And when you look at how funds are positioned in the cattle complex, they're about as flat as you can possibly get. They're net long about 17,000 futures and options contracts in live cattle, which is a drop in the bucket. Generally, I put anything in the 40 to 50,000 contracts in the kind of neutral bucket. So if we continue to see cash firm up, I think there's a potential for this market to continue higher as funds look to maybe get some exposure that they reduced into the back half of last year. Now, with that said, again, we're at the highest level since September. The RSI is at levels we haven't seen in some time in overbought territory with a reading above 70. So a little bit of a consolidation trade to start the week, I think, is very healthy. And I think a little bit of a pullback pullback from these levels would be healthy as well. But if we continue to see these fundamentals stabilize, again, I think funds could be coming back into the cattle complex.
So that's interesting because I think there's a lot of room left. We were sitting around 275,000 and change in total open interest on there, and I know we've seen well over 400,000 many different times. So it seems like there's a lot of room there to grow in that market.
Yeah, I absolutely do think that that's the case. Now, I guess the big wild cards are what we're keeping a close eye on is these outside markets, as this economic data just continues to flow in consistently. And then we're starting to see some hiccups in China, and will that spill over to the hiccups in the United States is still to be determined, but certainly something that could throw a wrench into the thought that we could see higher prices here in the near future. Seasonally, this is a friendly time of year for cattle through the middle of February. So there's a lot of tailwinds in the cattle complex. But again, you can't just write it off that we're guaranteed to rally. There's a lot of moving pieces this day and age in the cattle market.
Absolutely. Oliver, I certainly do appreciate you taking the time to be with us this morning. That's Oliver Slope. He is with Blue Line Futures. And Tammy, right back to you.